Hey, good morning, everyone. Happy Wednesday. It's October 15th, and we've got a lot of earnings happening today. And we have a market that is going up one day, going down the next. We've had Friday, the market went down, Monday, it went up, yesterday, it went down, and then today looks like it's going to open in the green. So this market is. A little hard to predict. It's always hard to predict, and we'll see where it goes. We'll see where it goes. Uh, I'll I'll see if there's a trend at the end of the week. I don't know if I'll have enough to look at to see if there's a trend, if we're going higher or lower. I know that for the 5 day, and this does not include today, the S&P is down 1.5%. So it's not enough to think about, hey, we're having a giant correction or anything, but that's going on at a high level. On the stream today, we plan on taking a look at some of the stocks that have announced their earnings and take a look at their fundamentals, do some valuations. And I'm joined by my colleague, Daryl. How you doing, Daryl?
Doing very good, Victor. It's good to be here. Hello, everyone.
And Daryl will handle the charts. He'll take a look at the charts and very interesting content. In fact, I'm going to send it over to Daryl. Take a look at the S&P and look at the charts. He was showing me some stuff earlier that I think you guys would really enjoy. And that's what we're going to do on this stream is take a look at stocks and try to see if these stocks are fundamentally priced with a discount or if they're priced with a premium. And then Daryl can take a look at the charts and see what trends he's seen with the stock. Are investors buying it up and it's set to probably go higher or logically go higher, or is it setting up to continue to sell off? Looks like we have a new member in the community. Thanks so much to Christopher Scheller. Thank you so much for joining. And hopefully you're on the stream. If there's a stock you'd like me to take a look at, please put it in the chat. Magical Self, good morning. And you want to talk about BAH. And BAH, I know Bank of America announced, but we'll take a look at BAH and see what that stock's all about. Thanks for joining. All right, so why don't I send it to you, Daryl, and you can kind of cover the S&P and tell us what you're seeing.
Okay, so Sunday I did put out a video on some various targets, and then I've been watching this fairly closely, and it's a little hard to make heads or tails out of what's going on. But we did have the big drawdown of, I shouldn't say big, it was 2.71, which is the biggest we've had since April 3rd and 4th. And March the 19th, we had a very similar drawdown. My theory is if we break down by at least 5%, then we're going to fall. We're going to fall further and could reach the February high. But I'm still optimistic on the market long term. I'm just being very cautious between now and the end of October. We usually, from a seasonality perspective, really start picking up in October, about October 27th. But between here and the 27th could be really choppy. But one of the things that I thought was interesting is on Friday, after the put call ratio, which I have here, I have the raw data in the light gray. In the background, I kind of have it dimmed out, but I want you to be able to see it. And then the darker blue line is a 5-day average of the put call ratio. So after the 5-day ratio falls below about 0.55, that means that people are not buying puts for insurance, and that usually lends itself when you look back at other times that typically leads to a pull off, when a pull down, a drawdown, when you get the put call ratio that low. So we've been low for nearly a month, and then on Friday it shot up to about 68, and I was thinking it would probably go to 75 or 80, and that would start signaling where a bottom was. But it's very curious that after 3 days of this choppiness and tariff talk and what have you, that the put call ratio in the raw data and the average is starting to roll over, drop back to where it was basically for the previous month. So looks like people are not taking a drawdown very seriously, and they're not buying insurance.
There isn't a whole lot of fear in the market right now.
Yeah, I could probably take a look at the VIX. Remind me right after this, and we'll do that. But this is an intraday chart for activity over the last 5 days. And one of the curious things, after the Friday sell-off, which was basically selling all day long, normally in the last 30 to 15 minutes of the trading day, that's when your institutional investors start acting, mutual funds and that kind of stuff. So every single day since Friday, here's Monday, there was a big sell-off in the afternoon, late in the afternoon. So we jumped up, we gapped up, we traded pretty much sideways all day, and then the market fell in the last 15 minutes. These are 15-minute bars that I have on the chart. And then yesterday, we had some selling, leveled off, and then 30 minutes before the market closed, we had a big sell-off, and then the last 15 minutes, some buyers stepped in and recovered some of that. So it's just kind of interesting watching what's going on and trying to figure out which way these markets are going to go. So we do have a VIX. Go ahead.
I thought the institutional selling it's really interesting to see that these are big sellers of stocks or buyers. In the case, you know how I made that earlier comment that the market as a whole doesn't have a lot of fear. Those institutional investors are not, I'm not going to call it fear, but they're just trying to intelligently kind of like just take risk down for themselves. So anyway, carry on, sir.
So here's the VIX. We can see that after we peaked out in April, I mean, we had a trending down. We trended down to a low on about 22 August, but then notice the trend is starting to move back higher. As long as it's below 20, don't get too concerned. But Friday, we did jump up to 21.66. Monday, we fell below this level of 20. And then yesterday, we were back above 20, sitting at 20.08. So this is also something I keep an eye on just to get a sense of where market participant sentiment lies at any given time. So just a quick overview.
Perfect. Well, thanks, Daryl. Looks like we've got a lively crowd on us. Magical Self, we will handle Booz, Allen, Hamilton in a few minutes. And Shamba Basher, thanks for the super chat. We will handle Rolls Royce. We covered Rolls Royce a couple weeks ago, so we can look at it again. It's the stock's been performing well. That, along with its another business that's similar to theirs, making turbines. So we'll take a look at it and see where it's priced today. So that is on the list. So today we have earnings, a lot of activity before the market's going to open in 20 minutes. ASML announced, Bank of America, Morgan Stanley, Abbott, Progressive, a long list of stocks. And what we could do is jump into ASML. I've got that queued up, and we'll just handle ASML to get going, and then we'll take care of the 2 requests that came in, and then Daryl had a couple stocks he wanted to take a look at. So looks like we might have. I have a long list of stocks here I wanted to look at, but we'll see if we have time. Let's get into it. So ASML is the big semiconductor equipment manufacturer. They're out of the Netherlands, one of the bigger companies coming out of Europe. They have a really strong moat. I don't think there's another company that makes the same type of machine they make. It's just super expensive. It costs tens of millions of dollars to buy one unit, and these guys have the best technology. And these machines are needed in order for semiconductor foundries to manufacture semiconductors. Now, this is a pretty good size cap, $380 billion in market cap. And the company has a PE ratio of 34.9, both for the current year and the future year, pays a tiny dividend. And analysts think it's fairly priced. The stock is doing well year to date, 41%. I started covering this stock a little more closely because I thought it was an opportunity, and I ended up buying the stock, and then it just flew up, which is nice. It went from 736 up to 983. So it's been a nice short-term reward for those that invested in it in 2025. The company is growing, but I read their financials or their press release, and I looked at their financials, and they're not growing as fast as I thought they were going to be growing. It doesn't have the updated numbers, but basically the last quarter they grew very little. I'll show that to you in a second. So now the messaging also in the press release was, we're not going to contract. And it's like, that's not very optimistic in my mind. Usually businesses are like, hey, this is how we're going to grow. And this is semiconductor, right? So it's interesting that the foundries are not buying, I should say, are buying this equipment, but it's not being purchased at a high rate. It's just kind of, they're sustaining their foundries. They're growing a little bit. So that's one of the concerns I have with ASML. I think they're going to be fine long term, but temporarily the growth isn't great on the top line. Let me take a look at their press release, and then we'll get into their valuation, which I have prepared. So as mentioned, they are not growing very much. The quarter for Q3 sequentially, it came down a little bit in total net sales. So they're flat sequentially. Overall for the year, they're going to grow at about 15%. And it's just not like Nvidia, where Nvidia is just growing by leaps and bounds, and it's like, wow, very dynamic. So this business isn't growing that fast. So the long and the short of it, when I looked at their financials, I updated my valuation based on those financials. Here's the net sales. This is the most current quarter, and that's tiny for you guys, right? Let me try to make it bigger. So they provided it via Excel. Let's see if I can make it bigger. It is not making it bigger. Huh. Okay. Well, I just have to talk you guys through it. So this quarter, 7.5 billion. The quarter prior to this one, 7. And the same comparable quarter a year ago was at 7,467,000,000. I think this is in euro. Yeah, euro. So So the growth is really small. It's like less than 10%, probably around 7, 8% growth. So that is interesting that this is beginning to slow down on the growth. The other things like cash flow is consistent with the revenue growth. And I updated my valuation on ASML. And basically, I uh, lowered my growth rate from 15 to 10. That's still a little generous, but I'm thinking, we got a semiconductor space that's really booming and a lot of, businesses being made, a lot of demand from the data centers. So I would think that they're going to need more of the ASML machines. So I'm keeping 10%, even though the company's showing that they're growing less than 10% per year. And once I updated that, I brought down my discount rates because I'm expecting interest rates are going to drop. So bringing it down. They have a good balance sheet. It really, I'm looking at ASML at a fair price. And given their earnings release, I actually am not as optimistic for them, not as bullish on ASML because they just don't have any like excitement in their business. It's almost like they're talking very defensively in their earnings report. So for me, ASML is a hold. I'm just going to hold it. I don't think there's a need to sell it. The stock is moving higher in the pre-market. It's up 5%. And this market is interesting, right? You got one day when things sell off, the next day things rise. I think Nvidia is rising quite well. So that's ASML. Do you have any charts on ASML?
Yeah, we can take a look at this one. I've got a 5-year daily chart. I put a resistance support line across here because it served as resistance in 2021. At the end of 2021, it broke down through that, but then served as resistance once more. It served as resistance right here, and now it is broken out above that. I also put these longer term trend lines on here just so we can see the channel that it's trading in. So let's drop back down to the 1 year. It did drop below the 20-day moving average on Friday, and it has traded above it the last 2 days. It did drop below it yesterday, but ended up closing above it. The 20-day is upward sloping, and the rate of change on that is pretty high at the moment going in. You said they reported earnings?
Yes.
Okay. So the rate of change going into the earnings was really looking pretty good. Also on this 50-day, the rate of change was pretty high. The 200 has bottomed out and it is upward rising at the moment. The RSI sits at 60. The PPO had a bearish crossover in bullish territory on the 7th of October. The divergence between those two averages seems to have leveled off. The accumulation is still very high. It looks like it's probably at a 50. Well, not quite. The peak was back in the early October, but it is increasing and it could surpass that. And the money flow is floundering right now. It's between plus 0.05 and minus 0.05. So it's in what I call no man's land. So it'll be interesting to see how this one plays out. It was very strong going into the earnings. We'll see how it plays out.
Yeah, it seems like you're also like my observation is, I was a little disappointed with their earnings. It was like, man, there's no excitement. There's no like, wow, we're going after these markets, we're growing. It was more like, hey, we're not going to contract next year. we're not going to go down in revenue. It's like, that's not exactly a very confident statement. Usually you talk about, hey, this is how we aim to grow. And it looks like the charts are kind of sharing that the stock was heading into the earnings with some optimism, and maybe that we've reached a high. Well, thank you, Daryl. It's very interesting. Let's get into some of these stocks that some of our viewers want to take a look at. And the first one is Booz Allen Hamilton Holding. And it sounds like a law firm. And it is actually a technology company, provides technology solutions using artificial intelligence, cyber, and other technologies for governments, cabinet level departments, commercial customers in the United States and internationally. The company offers artificial intelligence, which creates purpose-built AI solutions that adapt commercial and internally developed technology to the needs of federal government, cyber solutions, legacy systems. So tied to the government, and looks like their website's kind of giving us a quick show here just to get familiar with them. Okay, so they're doing a lot of business with the government, and maybe they are getting a bump in revenues because I know the government's been pretty active with the southern border as well as other activities the government's taken on. Okay, so let's take a look at fundamentals and take a look at this company. So this is a $12 billion market cap company. The past year hasn't been all that great for the stock. Year to date, the stock's down 24% while the S&P is up. And the story that's been taking software stocks down is the unknown future of software. Is the new AI paradigm going to make some software programs like less desirable or even obsolete? Like, hey, we don't need that anymore. I think it's going to change software, but to think that we're just going to completely eliminate these software systems, I think is not correct, in my opinion. And I do have a lot of experience with software. These guys, they're doing business with the government, which, well, with the shutdown, that's not good. But overall, I think it's not a bad situation to have the U.S. government as your customer. It's a big customer to have. So the stock has not performed. Market cap 12 billion, PE is low at 12, forward P at 15. Analysts think it's discounted with a 34% discount. Let's see if the business is growing. The business is growing. It's a $12 billion revenue business. So that's pretty good growth on a pretty good sized business. Let's take a look at the quarterly. So the quarter did show us some concern here. If they're contracting, when we compare the quarter that ended June 30th versus the prior year, they came down in revenue a little bit. They're plateauing. No growth is not good for their valuation. So when are they going to announce? They're going to announce on October 24th. So we are a week and a couple of days from that event. And I'm sure they're trying to figure out, how do we grow? We got to grow, or investors aren't going to be excited about the company. And they have not been excited for a little while. The stock's been selling off, and maybe the market saw something that is now happening to the company. So gross profit is not very good. If they're positioning themselves as a technology company, an AI company, they should have higher margins. That's a little bit of a surprise. So free cash flow is 987 million. Okay. See the gross margin here. Palantir is another is a true technology company that provides software, and they believe their software has a lot of AI in it. And they do a lot of business with the government, and their gross margins are 80%. And investors are very excited about Palantir, think that it's a terrific business. I don't own Palantir, but there's a big difference here. 80% versus 23%. So one of these companies is calling themselves a technology company, a software company, and they're not. They're probably just providing people that are providing a level of service, delivering a needed activity, and it's expensive. It's expensive to run a business with a lot of employees. So I think that's what we're seeing here. Profit margins are okay, but not great. And we don't have a growing business. So if they can't grow, they really should be valued at 10 billion minus debt, maybe 15 billion minus debt. And when we look at their balance sheet, they have a little bit of debt. They have $4.19 billion of debt. They have some cash on the balance sheet. So net debt's about 3.5 billion and debt to EBITDA is 2.73. So they have a passing grade on debt to EBITDA, although it's not an A plus where debt to EBITDA would be close to 0. It's actually closer to my limit, which is 3. So this business is not exciting. It's not growing for the quarter. They can change that in the next earnings. If they start growing again, I think the stock is going to move. For the current year, the market just does not like this stock. A PE at 12, if they're not growing, is appropriate. Maybe you can go up to 18 if you really like this business, but I don't like the margins. The margins are not good. When I value this stock, I think it's actually being priced too high. I think if I price the stock optimistically, it'd be a 15 billion minus debt stock, so that'd bring it down to 11 billion. And if I was more conservative on the valuation, it'd actually be worth about 7 billion. So it's priced too high, in my opinion. So that's Booz Allen. Interesting company. And it's interesting how much the stock's been sold off. What are you seeing on the charts with Booz Allen?
Okay, I'm going to step way back. So it looks like they came into existence as a publicly traded company in 2010. And they traded sideways for a couple years, and then they went on quite a run from $6 a share up to 187 this past January. So I wanted to get this longer look, and then I'm going to drop it down to about 5 years. I tried to find a good support resistance line. This isn't a really good fit, but this is about the best that I could do, right around $100. It seems to find a little bit of resistance, and then getting below 100, it finds support. But then when we step in a little bit further, we can see their high back in January, and they've been on a decline ever since. So I put a trend line there. The 200's declining, the 50 days declining, the 20-day is declining. The RSI.
The high was in October, November, wasn't it? Not January.
Yeah, you're right. November.
Okay.
Yeah, I thought it was January. It's November. You're right. Thank you. The RSI is at 39, and I would say it has spent the majority of its time below the 50 line ever since May. The PPO is negative, and we did have a bearish crossover, so this doesn't look very good to me. The one thing that did look somewhat interesting is as the price was dropping here, I see accumulation was moving up. So that was somewhat interesting. I can also see the money flows were positive for a
Huh.
period of time, even though
So
the,
investors were buying into that sell
yeah,
off.
that's what it
Hmm.
looks like to me. But as I go back to a 1 year view, this is a pretty critical point right here. Um, it hasn't broken above this trend line except for maybe a day. And
Hmm.
I don't even think it closed above the trend line. It just moved above it and then closed below it. So there's a lot of going to be a lot of indecision right here. And if
Hmm.
it breaks down below this support, then we could see a stock that struggles for a little while.
Yeah, it's been struggling. So, um, and what's interesting is, the big sell off started when the election happened or near shortly after the election. Um, so it may be that this company was benefited from a Democrat president, and then we had a switch in presidents, and now we're seeing the stock struggle. I'm
Wow.
just putting it out there that hey, the timing,
It
there
was
was an
almost
election,
it was almost exactly on election day.
so we'll see what happens there. But thanks for bringing that stock up. We're going to move over to Rolls Royce, and we're not talking about the cars because the car brand was, I believe, Volkswagen owns the car brand. There's not a lot of money in cars, so this business decided, hey, we are going to move over to something that does make money, and they Rolls Royce develops, delivers mission critical power systems in the U.S., United Kingdom, and internationally. The company operates through four segments: civil, aerospace, defense, power systems, and new markets. So they manufacture these big turbines, and these big turbines, I'm always amazed at how turbines operate, right? Obviously, they're on an aircraft, they're really reliable, thank God, and they just run. It's pretty incredible. And of course, we could visually see them on an aircraft, but they also get used to create power. You can power a turbine with natural gas. I believe on aircrafts they use kerosene as the fuel. Yeah, but on land they use natural gas. It gets piped over, and they can power a manufacturing site. I personally worked at a um, pharmaceutical device company where we had two turbines, and those turbines just ran. They ran, they never stopped. We would have maintenance on them every once in a while, but that was it. It was pretty incredible. Um, so this is the business. Let's take a look at the fundamentals. This is a company out of the UK. This is going to be all in GBP, and what is GBP to US? It looks like it's $1.33. So market cap 94 billion uh, GBP, revenue 19.5, PE ratio seems a little low this year, 16.4, forward P at 36. Looking at the 1 year, boy, this stock's really worked, huh? It's up 100% year to date, 97. So the stock's really rewarded investors. And this stock, I remember looking at it, right? The one that got away, and I probably have a list of stocks that got away from me. And we're coming out of COVID, and I did try to play now that we're out of COVID, some of these stocks are really down. I made some good money on some stocks that I did get right. But this one I looked at and I'm like, this is probably going to rebound well because as you get more aircraft orders now that we're out of COVID, this stock's probably going to benefit. And I did not see the power generation boom that we're now in. to support these data centers. But this stock's really, really flourished over the last 5 years, up 1,700%. Now, part of it is that COVID did bring down the prices, right? We had a pandemic and it brought down the prices, but overall, it's doing phenomenal. So that's look in the rearview mirror, but let's start looking through the windshield and see where this business is going. They are growing 9.6%. And you see this growth here. We're getting out of COVID. Airlines are now moving people around the planet and people are going on vacation. So they need more airplanes. So they had to order more Rolls-Royce turbines. Hey guys, we're going to build more aircraft, especially Airbus in Europe. So this was aerospace related, but we're seeing that the growth is not all that high from a percentage standpoint. Semi-annual, see, this is not a trend that I would want to be seeing if I'm not an investor in Rolls-Royce, but this is a trend where it's slowing. The growth percentage rate is slowing. So that's not good. And you think about, well, got a lot of data centers being opened. Why aren't these guys getting more orders? So that's a little bit of, I can't answer that question. Why isn't their revenue growing faster? So gross profit, this is where my preference is to buy companies that are experiencing high rates of revenue growth, that have terrific moats, a way of keeping their competitors out of their market. They have an addressable market that is gigantic and they can grow for a long period of time. And they make lots of money defined by your gross margin is 80%, 90%. Your free cash flow yield is 30, 40, 50%. These businesses are really, really fantastic. That's my search is try to find that business. And we would look at aerospace and defense stocks. That's where it kind of falls apart for me because the gross margins are 25%. Oh, man, it's like the fly in the ointment. It's like you have good growth, you have a good story, but you just don't make a lot of money. Now, rationally, let's think about it. How do you manufacture a turbine? You have to buy very high quality materials. These are the best materials we can put in a turbine. That way it doesn't stop running mid-flight because that would be a big problem. You hire very qualified personnel. You train them very well. You give them a very good career because you don't want to be changing employees out. That probably hurt your quality. All those things cost money. It costs a lot of money to manufacture, assemble, and deliver a turbine to a customer. So when they sell $1,000 of revenue, they only get to keep $250. Okay. And that is not comparable. I showed Palantir at 80%. Palantir delivers $1,000 of revenue. They get to keep $800 gross margin. So it's a very different, valuation that I put on companies like this because of the lower margins. They do have a higher profit margin, probably because this probably has the direct overhead burden, depreciation, and they're probably extrapolating that, and you have a higher margin, profit margin. But you see other years, the profit was not very good. So this is where it falls apart for me for a lot of aerospace and defense contractors and businesses. And that's why I don't own any, but that's the lane that I've chosen. If you love aerospace and defense, go for it. Especially on this stock, you've been doing quite well. Let's take a peek at their balance sheet. Make sure a Rolls-Royce is not hampered by debt, and they are not. They have more cash than they do debt. Nice job. Excellent balance sheet. All right, so this valuation, so they are going to announce on October 30th. They announce twice a year. They're in Europe, so they will only announce twice a year, and we're going to see an announcement on October 30th, which is about 2 weeks away. For now, my valuation, I did it on April 10th. So is this still valid? Well, yeah, because the announcement's coming around, and this is a valuation with a discount rate of 8%. We're moving to 7.5. So I'm going to change that to 7.5. It is discounted if you consider, let me double check all my figures. Why don't I do this? Why don't I throw it over to you, and I'm going to double check all these figures, and then we'll come back to it.
Okay. So since the April tariff announcements, they haven't tested the 50 days since about April the 22nd. They did test it intraday yesterday, and they are testing it intraday today as well. So the 20-day has rolled over and is now decreasing. The 50-day is still rising, but I notice a little crook here that tells me that it could be starting to peak out. So that's something to consider, that we may have a slight pullback in this stock. The RSI is currently sitting at 44.3. We did have a bearish crossover on the PPO, but it is in bullish territory. The divergence between those two moving averages seems to be increasing. The accumulation is still very high, but the money flow currently is in bearish territory. So I think this one could actually pull back a little bit more over time.
Okay. All right. So, yeah, I updated my numbers, and let me finish that off with you guys looking over my shoulder, so to speak. So I had one issue going on, but I fixed it, which was, excuse me, my stock price wasn't updating properly. But let me take a look at and revisit all the fundamentals. All right. So the business is growing, but beginning to slow its growth. So that is something that on the 30th of October, when they announce, that's going to be important to watch. Like, hey, what's happening with your growth rate? Are we going to see a slower growth rate? So this guy here, so that is a little bit behind. So let's update that number. %10 growth. Yeah, I'm good with that. And so we got growth rate of 10%. I'm good, but this earnings that's coming up in 2 weeks could change my growth rate, because if they come back and say, no, we're only growing at 5%, then we got a problem. But if they say, no, we're going to grow at 10%, then we're good. All right. So they had a little more cash than debt, and their cash position, and this is all in the British currency. It's not dollars, by the way, even though the symbol's right next to it. And then earnings per share. So I'm not finding the earnings per share figure really well. So I'm going to use the previous one. And I think it's fairly priced. I think the market's pricing it fairly. because of the growth rate. Free cash flow looks good. So that's where we're at with Rolls Royce. This isn't my favorite industry because of that gross margin. And it's really hard to grow in this business because if you decided, hey, we'd like to produce twice as many turbines, you have to build more factories. You have to build more capacity to manufacture, and that's expensive. So it's not like a software business like a Palantir that says, we want to sell twice as much software. No big deal. Just have more customers download from your website and you're good to go. So I think Rolls Royce is fairly priced. I don't see a lot of upside. The story on the data center is really causing investors to invest in power generation. So I get the story. The story is really moving Rolls Royce up. It's moving GE Vernova up in price. I get that, but I invest on fundamentals and not stories. And that's my analysis on Rolls Royce. So thanks for asking about Rolls Royce. And when they announce, let's come back to it in a couple weeks. And thanks for sponsoring that super chat, Sean Babasher. Appreciate it. Tomas, good morning. How are you? So Adobe, Adobe. Let's talk about it because, man, I'm beginning to get concerned around software companies, and Adobe's kind of a stock that I've been concerned about. Let's take a look at it, and they should be announcing soon. So I'll put that on the list, Tomas. You're one stock away from looking at it. For now, we're going to look at Mara. And Mara, I think, is Marathon. No, it's Mara Holdings. Mara Holding operates as a digital asset technology company in the United States and Europe. It provides technology solutions to optimize data center operations, such as liquid immersion cooling firmware for Bitcoin miners. The company was formerly known as Marathon Digital Holdings and changed its name to Mara Holdings. Okay. So these guys produce. So these guys produce a product, huh? So these guys are a global leader in Bitcoin mining that develops and deploys innovative technologies to build more sustainable and inclusive future. Okay. So they do Bitcoin mining. Okay. And look at these data centers. Incredible. That is some compute there, huh? And look at these racks. All these are GPUs, just trying to mine Bitcoin, trying to earn those Bitcoins as they help the blockchain confirm transactions on the ledger. So that's what these guys do. It's part data center. I think they're innovating and creating ways to operate data centers effectively. Let's take a look at their fundamentals, see what's going on. So the 1 year, the stock is not flying through the roof like a lot of other data center companies. So I've seen that companies that are in this space have seen that, hey, the AI space is really is really growing, and we could sell our services to companies that want to develop AI, large language models. They want to do agentic AI. that whole space is taking companies like CoreWeave that used to be a Bitcoin miner and moving them into that space. And these guys are kind of sticking to the Bitcoin mining, are probably doing a little bit of the work toward doing AI related data center services. Okay. They claim to own the ability to create power. Okay. So these guys, I wouldn't argue that they have assets that are in demand at the current time, especially the power. Market cap 8 billion, which is really low. Revenue 798 million. P ratio is really low at 13, forward PE at 29. And analysts believe it's fairly priced. So they're growing really well. So why is the market not excited about these guys? This is really good growth. Looking at the quarterly, the growth in the quarter that ended June 30th, the second quarter, 64%. That's really good. These guys are earning Bitcoin, and the price of Bitcoin has been going up for the past year. For the last week or so, it's been going down, but for the last year, it's been going up. So I'm impressed with the sales growth. Man, they are burning cash. They're putting a lot of money in that data center, I suspect, and that's what is holding back their free cash flow. So it's a negative free cash, and they've never had positive free cash. So it's always been, hey, we got to keep putting money into that data center. When we looked at that picture, that big giant data center, those GPUs are really expensive. So that's one thing to consider about this business. The gross margins they're okay. They're not good. They're not great. They're just okay. 41% is just okay. Profit margins, it's because you put a lot of capital into your data center. You're basically showing a net profit because that's a sunk cost, so to speak. And the free cash flow margin is not good at all. So this business is really hard to value because we can't value it based on free cash flows. And I think their profit margins are not. I don't think we can rely on them. Charlie Munger, the great investor that passed a couple of years ago, he hated the earnings per share number. He felt that management could really tinker with that number too much. I have to agree with him. In some cases, they tinker a little too much. Cash, 109 million. Debt, 2.65 billion. So they do have some debt. Debt to EBITDA at 2.17. The debt level is not too much of a problem at this point. All right, so we have a business that's burning cash. Let's go back and look at their statement of cash flow, see what's happening there, and see where most of the cash is being burned. So here's the CapEx number, a lot of CapEx. CapEx is we're buying more GPUs, we're buying more equipment for that data center, and that's where a lot of cash is being burned. And then this was like a paper gain that the business took on their income statement, and they have to undo it on the statement of cash flows. That's why investors depend on the statement of cash flows. Is we just want to look at cash. If you have a paper gain, doesn't count. Take that out. And that's good. You see how they've had all these like somewhat paper gains, and overall it leads to having operating cash flow in the negative, and then you have to deduct CapEx. So this business is burning so much cash. I can't offer a valuation because I can't work with negative numbers, and the earnings per share I am not totally comfortable with. So 12 analysts, one thinks it's a $30 stock, Another analyst believes it's a $9 stock. Let's look at their forecast. Looks like they're going to keep growing, but they're going to lose some money this coming year and then lose some money next year. So I can't offer a valuation on Mara. It's not a stock that I would touch. If so, I own Bitcoin. I'm glad to own Bitcoin. I'm going to hold or hodl my Bitcoin, and I'm good there. What businesses am I investing with regards to crypto and Bitcoin? Well, I really like Coinbase because I think they are creating new businesses that are going to help them organically grow. So I own Coinbase. Robinhood benefits from crypto because they sell crypto on their website. But this business here, I'm afraid of the CapEx. There's a reason why I haven't liked utilities because they have to put so much darn capital back into their operations. And this business here scares me. It's like, is the investor ever going to receive benefit from this business, right? The job of management at a company is to return value back to investors. Well, if they're burning cash at these rates, will they ever have the resources to pay a dividend, to acquire another business, to grow, to continue to grow? And those things would scare me off. So I would not buy Mara Holdings. What are you seeing on Mara Holdings, Daryl?
Yeah, it's a pretty volatile chart. And to get this topmost trend line, I had to go all the way back to where they IPO'd, and I have that connected to the 2015 high and the 2021 high. Then I put an upward trend line, which is connected to the lows in 2020 and this low that we saw in April. So the price has pretty much been consolidating. And I added another trend line from the November high that is touching at least 2 or 3 points here. So using these two trend lines, the price has pretty much just been consolidating since I would say 2022. So this it doesn't look very exciting to me. Let me keep that up there. Notice the accumulation has really fallen off since 2024. Look at the money flows. I think it spends most of its time in distribution. So this is one I would trade, but I would not own it for the long term.
Yeah, this one's it. The market hasn't had it rally, even though it's taken data center, pure plays up really high. I think it's concerned as well. So those are our comments on Mara. We're going to switch gears a little bit. I've got two stocks on the wait list, Adobe and then Interactive Brokers. But let me hold off on those for a minute because I wanted to just take a look at the market and then give Daryl a chance to cover a couple of stocks that he had done some prep on. So the market, it's pretty green out there. Nvidia's up, Broadcom, Apple. I mean, there's only a couple of spots that are red, and it looks like the insurance business is not having a good day. Abbott's not having a good day, but everything else is coming up green. That's a pretty solid green. So it's interesting to see the market go down one day, go up the next day. If we study yesterday, a few stocks sold, but a few stocks were still gainers. And I'm kind of purposely going 1 week to see which stocks have really been making it through with gains. And looks like Broadcom, AMD, of course, they've been killing it. Banks have been doing quite well for the 1 week. Consumer staples, utilities, but that's who's made it through. without too much damage. And other stocks have held their own, but that's where we're at with the market. So let me give you a little bit of, you want which stock did you want to cover first? I think you had ADC, ARCC, Citi, and then you want to look at CRE a little bit.
Yeah. We can scratch KRE for today. I know we're time limited today, so we can do that on another day, maybe Friday.
Sure.
So I have a ADC pulled up. So
All right.
ADC is a real estate investment trust, a REIT, and I invest in this one because I'm an income investor, at least for the next year or so. They pay a dividend of 4.13%. They have been on a decline since the 22nd of April when they hit their peak, but they have just broke out 3 days ago above this downward trend, and the looks like the Fed Watch tool is pricing in some additional rate cuts over the next year, which really helps REITs. So if you have any interest in income, this could be a good time to step into ADC.
Yeah, the interest rate reduction is really going to help this business.
Yep. They just moved into bullish territory on the PPO. The RSI is not quite overbought yet.
Perfect.
So I've been adding shares on this breakout.
Yeah, and they pay a dividend 4.18. That's really good. These guys do retail, which is a little bit risky, but I think a lot of the risk is kind of baked in. And not a bad idea. Not a bad idea at all.
They're kind of like the little brother to Realty Income. Realty
Right.
Income's the big one, and
Yeah.
ADC is a little smaller, but they have a potential for greater growth compared to Realty Income.
Let me show a couple of fundamentals on Agree Realty. So analysts overall are optimistic on the stock. Now, this is a real estate investment trust, so this isn't like, hey, this is going to be the next Palantir. It's just a different business. They will pay high dividends. It's a real estate. They have assets. But for a 10% discount overall, that's pretty good. That's pretty good because you're expecting you're going to earn that dividend of more than 4% and then see that dividend, get an appreciation rate as well. What I really like seeing is it's expected that these guys are going to grow. Okay. That if they're growing and they're doing deals with lower interest rates, that's a recipe for profits. That's a recipe for that dividend to keep rising. Earnings per share is going to expand. Okay, so that's where I want this stock to be if it's an investment that I would make. So I'm seeing really good fundamentals on Agree. It looks like the stock is not overpriced. In fact, it's probably been kind of sent to the corner for a while. But overall, I think this stock could really work, especially as we deal with, right? We have a market that's really expensive in some sectors and industries. Technology, everything data center is like incredibly expensive. Well, real estate, it isn't going to go anywhere. Real estate's going to be a necessity. It's not a bad way to, take some of those profits from a superb investment that you're like, you know what? It's kind of, I want to take some risk off, and then moving it over to a real estate company isn't a bad idea. Back to you, sir.
So there's a question for me. How long would I keep ADC? This is one that I plan to hold as long as interest rates, when they start dropping, I'll continue to hold this one. They provide a really good dividend. I've invested 28 times on 20 different occasions. All of them are winning trades at this point. You need to buy these when interest rates are higher. You get them at a much lower price, and then ride. If you anticipate that rates are going to be coming down, that's a good time to be buying these.
Yeah.
So I pointed out the chart, and my trades also indicate that. So ADC has done very well. I'll hold it as long as the interest rates are on a downward spiral and they stay significantly below like the 10-year. Okay, and the other one was just ARCC. So the business development companies, Main Street, ARCC, ODBC, they've been struggling here the last month or so. I guess basically because as the interest rates drop, they lose some of their interest income because they tied some of their loans to flexible interest rates. So they've been on a pretty good decline here recently. They have a book value of $19.88. So they are trading just above that. And for the past week, they've been trading below that value. And buying them below book value is typically a really good place to pick them up. And they, for the last 3 days, have really started shooting back up. I don't know exactly what the reason, other than financials have done very well over the last few days. I don't know exactly why ARCC is starting to rise, but they're definitely breaking out of this downturn. They pay a dividend of 9.57. So I pick it up when it's below $19.88, and I plan to pick some up today. I have 500 shares. I had up to 1,500 shares, but I've been trimming them for a long time. So now I have a core holding of 500, but I'm going to pick up another 100 shares today.
Very good. And I don't have any fundamentals to cover on ARIS. If you want to move on to the next one when you're ready, or not sure what else you want to cover.
Oh, Citi reported yesterday and they really shot up.
Yeah.
So we don't need to cover them specifically today.
All right. Sounds good. All right. Let's turn our attention over to Adobe. Tomas wanted to talk about Adobe. Let's take a look at Adobe. And this stock just is not working. I think we saw another technology stock earlier in the stream. The market is either unsure or believes that AI is going to hurt Adobe. It's going to hurt Salesforce. It's going to hurt ServiceNow. It's going to hurt, there's a long list of companies that it believes. What is the software space going to look like after AI? And, I can't answer that question precisely, but I just logically think about where AI is, what it does, and think about what Adobe does as a software business. And I believe that Adobe is going to it's going to continue to grow. They're going to continue to make a lot of money, and they're going to flourish. The market doesn't agree with that statement. And over the past, year, the stock's down 34%. For the year to date, it's down 24.5. So the market just is like, hey, we just want to buy semiconductors. We want to buy into the data center. You produce power into the data center, and software companies, you're off to the side, at least Adobe and Salesforce. And this business here is going to report September. They reported September 11th. So we're going to be waiting a while. December 11th is roughly when they're going to report next. So we won't get any new information for a little while. But they have just been producing growth. Okay, so their growth is quite good. I'm not showing weakness on the top line. The top line revenue is still pretty solid. And when we look at their profitability, look at their gross margins, 89%. That's excellent. Profit margin, 30%. So it's a good business. We use the ratio on software companies. You add profit margin plus growth at 10%. You're slightly above 40, call it 41 or so. And if you have a software company that has that metric of over 40, it's supposed to be a good investment. So Adobe is discounted. It's the leader in their space, makes lots of money, generates high rates of free cash flow. It's discounted. I just don't know when the market is going to buy Adobe again. It's not buying it today, and the market's going up. So this one here is a head scratcher, and I don't know when it's going to rally. Any comments on Adobe, Daryl?
So I'm looking at a 10-year chart here because I'm trying to find out where the majority of the support and resistance is located. And it looks like it's located about where the price is now. So it served as support in 2023 2 times. It actually rose above that slightly in 2020. Since 2020, it spent most of its time above that line. So now if we step out and just look at maybe a year or two, we got on a pretty good downtrend starting September of last year. And that's this top line. And then I see another downtrend line, which has actually been tested more often. Now I'm going to, so looks like it's actually trading right at that resistance line and at that support, the horizontal support and resistance line. So it's trading right at the trend line and right at support. So it looks like it has quite a bit of support here at this level, but it's definitely in a downtrend. I don't see it changing that very soon. I do see a lot of buyers in between over 5-year period, a lot of buyers between 379 and 347. That's where most of the buying has occurred. So that seems like where the market thinks, from their opinion, where they think the fairest value is. So we have quite a bit of indicators all pointing to this level.
Yeah, and the market is just not buying Adobe. It's not buying Salesforce. Intuit, I think this is an opportunity that I'm buying into it. This is a great business, but it looks like Workday. So this space here is not going up while things related directly to the build out of the data center are just flourishing. The big caps are Google's going up, Meta's going up, Tesla's going up. So Adobe's, I don't know when the story is going to change. Maybe, I don't know. There's kind of, I think the story, the narrative has to change in order for Adobe and other software businesses to go up. How am I playing it? I'm just waiting. I'm waiting for the market to tell me, okay, we like software companies again. And because I thought we were going to find a bottom sooner on Adobe and Salesforce, but we haven't. So instead of guessing, I'm going to wait for the market. And that's great about doing live streams with Daryl is he looks at the charts and it really informs me on what's the market doing. You know, I could have a valuation story, but until the market is ready to buy that story, it's just going to sit on the shelf, so to speak. All right, let's move on. Looks like the market's still chugging along here, putting more value in our portfolios. Looks good. Looks real good. All right, we're going to go over to Interactive Brokers. And Interactive Brokers is in competition with Charles Schwab. They're announcing tomorrow. Robinhood, Fidelity, E-Trade, which is owned by somebody else now. And this stock has done well, 56% rate of return over the 1 year, 82%, because the brokerages have been doing really well. No big surprise. Stock market's up. So a lot of investing is happening. And Interactive Brokers does provide, I think, a lot of what investors are looking for. And I know a couple of investors in our community use Interactive Brokers. So I think the stock's done well for investors. Looks good. There's just good choices in this space, right? Pick the stock that you feel most comfortable with. Interactive Brokers has a PE of 36, forward P of 32. It is a little expensive, not out of the question. It's been going up, so maybe it is a little expensive. Looking at their growth rate, the growth is good, 18%. Its peers, some of its peers are doing better, quite a bit better, but this one's doing well. Revenue of 5.6 billion. It produces very good free cash flow. It produces good profit, and just the cash flow is really, really off the charts. Interactive Brokers, I think I have a discount. Let me see if I have a valuation. I think I do. Yeah, I have a discount on the stock. Just when I value the business, and at this point, I'm moving my discount rates down. Overall, a 29% discount, and can't argue with an investor that says, "Hey, I like Interactive Brokers." Hey, good luck with it. I think the stock, based on fundamentals, and if I value the business based on its cash flows, and I took a 3-year average because the most recent cash flows are just too high to use. They're abnormally high, so I just take an average to be more conservative. The earnings per share looks good, so it looks really good. Just compare it to its peers, right? You can compare against Charles Schwab, which is pretty much very similar, a little different, but very similar. I think Interactive Brokers is probably less of a brand, probably less expensive too on trades and so forth. Probably gives you a little more functionality if you're an advanced investor versus Charles Schwab. That's going to give you probably more support should you need it if you're learning to be an investor. So that's Interactive Brokers. Any comments on Interactive Brokers from you, Daryl?
I'm looking at the long-term chart, and I can see a couple level shifts here after it ran up in 2018, and then it traded sideways for a couple of years and then broke out, and the level kind of shifted up for 2 years. Then the next year it shifted up again and is broken out again in 2024. So that's a pretty important history and how the price levels have shifted up over time. Of a rising 20-day, 50-day, and 200-day. Yesterday, intraday, they did come down and test that 20-day moving average. Looks like they're trading down just slightly today. The RSI sits at 55. The PPO is in positive territory, but I'm noticing a bearish crossover today. That's when the black line crosses through the red on the downside. So that's a bearish crossover, but it is in bullish territory. One other thing that I noticed when I was on the longer term chart, the accumulation was pretty flat up until about November of 2023. And now look at the
Yep.
rate of change on that accumulation, and look at the money flow, how much time it is spent in bullish territory. Maybe a month here, a couple weeks here, looks like a week there, looks like about a month here, but now it's back in bullish territory.
Looks good.
So, yeah, it does look good right now.
And if the market continues to rally higher, Interactive Brokers and all its peers will do well because people will continue to put money into the market. If we have a solid sell-off that is takes a long time, like 2022, this stock, and as well as its peers, will go down just because their revenues are going to go down. In bear markets that are longer term, investors go away. They're like, a lot of people don't want to stomach the bad news. So they're like, hey, I'm going to come back when the news is better. And that's what I expect may happen. All right. So let me cover a couple last items and then we're going to end the live stream. First question was asked. I think Peyton was asking, Astera Labs, right? It really had a sell-off yesterday. It sold off by like 19%, was it? And what's it doing today? So it's up to 2.6%, but yesterday, boy, it just did not have a good day. And there was a negative story, or a story that, hey, AMD, I guess AMD doesn't play nice with Astera Labs, I guess. Astera Labs plays really nice with NVIDIA. The whole story that AMD is beginning to flourish was a headwind against Astera Labs. It may be the case. I think it was overplayed. But I think the fair price on Astera is $133 a share. It's still priced at a 20% premium. So that's answering your question, Peyton. Astera Labs is exciting. It's high growth, but that's where the valuation lands for me. And then last stock we're going to touch on is MPW. This stock has had a really, really tough 5 year. Stock's really sold off. They're a real estate investment trust that provides properties that operate as hospitals and medical facilities. And the stock over the 30 days up 3.9%. It pays a 6% dividend. So good to see it rise. This business really, it had, I think, one of its main tenants go bankrupt, and it really, really I think its biggest tenant go bankrupt, and it handicapped MPW. So the stock is trading at a low stock price, but for all we know, it could be a really nice winner now that we have lower interest rates, as we talked about REITs earlier. You know, maybe not a bad place to be. If this company is now going to begin to grow, it's not going to get a bad tenant again. And it could begin to just to operate as a real estate investment trust in the healthcare space. All right, guys. So we are going to end a little early on this session. Thanks so much for tuning in. We appreciate it very much. But we've got a couple of things to get to, speaking for myself. And but Daryl, thanks so much for joining me today. Anything going on with your channel you want to note?
I will be putting out pretty regular videos on holdings in my portfolio and just how they're trading it and their relative strength and the implied moves as we move into earnings on companies. So I released a couple of those, one on Sunday, one on Monday, one for Citigroup that performed pretty well, and also Johnson & Johnson, which beat on earnings, but the price actually dropped. The initial reaction was actually down. So I'll be putting those out on a fairly regular basis over the quarter as earnings happen.
Excellent. Thanks, Daryl. Thank you for all your analysis today. Thanks, everybody, for tuning in. We're going to come back on Friday and do the same thing. It'll be interesting to see how this market holds up. We're having a really good day, but we'll see if the market's going to hold them. I'm going to giggle if tomorrow we have a down day, 'cause it's like down one day, up the next, down one day, up the next. And we'll see toward the end of the week if we could establish, okay, so what's the market doing? Is it going to pick a direction, or is it just going to be choppy for a while? We will see. We will see. All right, everybody, have a terrific day. Good luck with your investments. And again, thank you for tuning in.